Hey, good morning, everyone. Marty Missouri here. It's the 20th of August, Tuesday, 2019. Let's call this your pre-market update. Did this for you yesterday. I think I'll start doing this on a regular basis. If I think it's pertinent, if it's interesting for you, maybe instructive in terms of what your expectations should be if you're watching the market every day. And these are ones I can just keep, quick and to the point. If you're with me yesterday, we talked again about this, I'm going to say small but steep correction that we experienced right in here so far in August. Came back. I told you originally this looked like your classic step back rally, would die somewhere in one of these three zones, if you will, and then come down, and we were probably going to go below this low and then test some other support levels down below. Well, the more we don't do that, the less likely it is. I pointed out yesterday that we hit this retracement level, 61.8, which can be key, 5 times, and that we were looking to test it again yesterday. And if we could get through there with some momentum and enough shorts cover, well, then we're going to be perhaps shooting to new higher levels than we've been here of late. Well, as you can see, we went right up against it and failed it, and here we are. This is the futures chart. Here we are this morning testing it once again. This would be the 7th test of this level, and as I suggested yesterday, there's a school of thought that says that you keep hitting something like that, you're going to weaken it over time, and ultimately you're going to break through it. Clearly what happens is we come down off of that a bit and we have buyers rushing in. I would say in terms of what is inspiring the buying, I think there's some seeming calm on the trade front. At least it's not hitting the headlines as much. It's not hitting the Twitter feeds. There are some things developing under the surface. Yesterday, I think it was viewed as being bullish that the U.S. gave Huawei a 90-day reprieve to do business with U.S. tech companies. China didn't seem to like it much because something like 47 subsidiaries of Huawei were not given that reprieve, and so China's verbal response was not at all positive. But that didn't seem to upset the markets at all. China is very upset with the administration's go-ahead to sell Taiwan a bunch of fighter jets, and so, but it just doesn't seem to be upsetting the market. I think the market is really looking to later this week. It's Friday, actually. I think I said Thursday yesterday, but it's Friday, that Jerome Powell gives his speech at the Fed's annual Jackson Hole, Wyoming meeting. That has been a venue for some big announcements in the past about all that we could legitimately hope for under the current circumstances, at least all that the bulls could legitimately hope for, would be a hint that there'd be a 50 basis point rate cut. The data on the surface of late really doesn't support that argument a whole lot. Under the surface, as I've illustrated for you, there is a case for it. Our index is in the red by 10 points now, and that's got me concerned historically as we backtest it. That tells us that recession risk is really beginning to grow. And that's some of the other headlines you've been hearing of late. And that really got the market freaking out right in here last Wednesday. So right now, it just seems to be a stomach to buy the dips. We'll see. I said yesterday that this could ultimately be a bull trap where we get through this level, suck in a lot of unsuspecting bulls. Individual investor sentiment has been very bearish of late. And again, my base case, given all the uncertainty out there and what I'm seeing in the technicals, is that ultimately this does fade and we have conversations at lower levels. It doesn't have to be the case. My longer term base case is that, we could very well test these highs over the next few months and even exceed them. But until we really come to some conclusion on some big geopolitical issues, and the primary one I've been referring to on the blog, I just really can't get bullish in here, and I want to stay conservative. I want to keep client portfolios hedged. and really not participate a whole lot in this market and really protect the downside until we get some resolution. I think that's the smart thing to do given what we're seeing in the economy and our own indicator and in the technicals. And I'll close this morning's monologue by just zooming out a bit here. Here's basically just going back to still the daily chart for the last 2 years. For one thing, look how key this current level is. This is that line we're butting up against right now. We go back a ways. As you can see, this is exactly where the market peaked back in September before we had that huge correction, worst December since 1931. Came back, tested it right here, and failed right there at that same level of resistance we're threatening to push through again this morning. Failed it there after multiple attempts. If I zero in on that, what do we have here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 or so attempts, and it ultimately didn't weaken it enough to penetrate it. Then we came back up in here, 1, 2, 3, 4, 5, 6, 7, and then it looked like it did. Then we had a nice rally higher. It's kind of the story I just told you. You could see that happening again. But this, under the circumstances, I think would be the ultimate result, and that's where we roll over. So while it looked like this was a breakout to the upside, right now we'd have to conclude at this point that that was a failed breakout. Failed bullish breakouts are one of the ugliest technical signs you can imagine. But right now, this market just really isn't willing to give it up. The other thing that I think is key is the longer term signals, and that's in these divergences, as you can see here. The MACD was breaking down. That's a clear negative or a bearish divergence, and then we had that big drop last year, and then here we are now. That's just a very stark and clear negative divergence. That's a strong signal, somewhat reliable signal, especially remember coming off of this upward sloping wedge that we had here, that this breakdown may have further to run. In the technicals, that's what I'm seeing. This right here on a short-term basis, you see this, the blue line there, that's the signal line about to go above the white line underneath this line. That's actually bullish. That's a short-term buy signal. You can see we got that here, and we ran up to new all-time highs. It's especially good underneath this zero line right here. Up here on top of it, you can see you get a lot of whipsaws. Down in here, when we came up through it, that basically just signaled that this bottom is for real. Again, something that looks like that here. However, in here we had it twice, and ultimately it didn't quite work out. So again, so that's one positive today, and the fact just that the price action that the market continues to want to push higher is a positive as well. From a longer term technical perspective, this is a real negative. This bearish divergence has got to resolve itself to the upside before any good technician who's looking at this long term would say that the technical damage has been corrected and we're off to new all-time highs. So folks, I'll leave it there for this morning. If it makes sense, I'll do an end-of-day wrap-up for you with another quick video, and of course look for the written blog in between. Thank you as always for watching and listening, and I'll talk to you later.